Hey, happy Friday. We made it through another week and mortgage rates have remained at the current levels from last Friday, which is really good. Last week, you may remember, was jobs week. We had that big miss with the jobs report, which pushed rates down to rates where the average 30-year fixed in the US is about 6.29. And then FHA and VA loans are right around 6%. Keep in mind there's a lot of variables that go into that: cost structure, credit score, size of loan, etc. But when we look back and we look at the bond market chart, remember we talked about how the higher the price of bonds, the lower the interest rates are. We can see that we are at levels that we have not seen since last September, right? Every month since then, mortgage rates have been higher. Now, over this past week, we can see really little movement. But again, I'm taking this as a positive because we had two inflation reports. One of them actually was a little bit worse, a little bit hotter inflation than expected. But all eyes right now are on the Fed next week. They're meeting on the 16th, and they are expected to cut the Fed funds rate 0.25%. Now, as I've talked about the last few weeks, when the Fed cuts rates, there is not necessarily going to be an exact impact on mortgage rates. They control what's called the Fed funds rate. Short-term interest rates, mortgage rates oftentimes actually can move in opposite directions. So we saw that last year when mortgage rates moved really low. They went from about 8% in October of 23 to about 6% in September of 24. Then the Fed cut rates mid-September right here, and mortgage rates started to move higher. So I don't think that's going to happen, but I also don't think we're going to see a significant move lower in rates because we've already seen the move lower. The last 2 months of weak economic news the bond market has already kind of baked in this move lower. And so, like, for example, if the Fed doesn't cut rates, we would see a reversal here. If they cut more than 25 basis points, we could possibly see mortgage rates even moving lower. So great opportunity right now. Again, sellers that are going under contract this week have negotiated seller credits. So not only are you getting a lower interest rate to begin with, but you can still get the seller credit to do the buy downs. If you need any help this weekend, feel free to reach out. We're glad to run some numbers for you and help you structure the offer as competitive as possible. If you want to make your offer super aggressive, we can also close most loans by the end of the month. Okay? Thanks so much and have a great weekend. Bye-bye.